G'day everybody, Julian here from Ripehouse Advisory. If you're new to the channel, make sure you hit subscribe, smash that like button, because on this channel we talk about property and all things related about wealth creation. In today's video, we're giving you our kind of monthly market update in terms of where we're purchasing, but also some of the trends we're seeing in the data. So let's get straight into it. So from our last update, just taking a bit of a look, firstly, we'd like to get into the capital growth. So for those new to the channel, the rolling month change is how that market's performed over the last month. The 12-month change is how that area's performed over the last 12 months. And change since last session is essentially almost how that market is trending, whether it's going up or down, if it's a hot market that's heating up more, if it's a cooling market, or it's something that's going really stable. So if we take a bit of a look through, Sydney and Melbourne, they've dropped back since the last session, about 0.7%. If we keep going through further in the line, Brisbane and Perth. So Perth's had a bit of a spike in some of the news. Some people are saying Perth's getting maybe a bit of a second win there. That's not, I guess, too big of a surprise. I have always been asked by clients who have made a lot of money in that Perth market in terms of, is it time to sell because that Perth market's topped? Don't think it has done that, because I always say the fundamentals for Perth are they're still really struggling from a supply side of things there, and that's been really kind of published in some news articles along the coming months in terms of how many people are going to open homes to try and find places to rent. So still in the double digits. Adelaide market is definitely cooling. It's continuing to cool. So we're still at 10% capital growth for the last 12 months, which is a fantastic number, but it has been a market that continues to cool down. Canberra, we don't really purchase in Canberra, so we're going to give that a skim. Darwin, where we don't purchase as well, but you've heard me talk about how I felt that was a market that might be just a quick money grab you can get in and out over a couple of years. And it is continuing again to cool again. So we're at 14% for the last 12 months. A lot of that interest into that Darwin market has been maybe some prettier on the eye properties with higher rental yields. But for myself, and I know some other buyers agents out there, the fundamentals just really aren't there. We've got weather issues, really high, expensive insurance premiums as well. Again, it's just somewhere we're not really big advocates for. I've touched on Hobart being an area of interest for us as well for probably the best part of 6 to 12 months now. That's had a good last 12 months at 7%. It cooled off a little bit last month. But the national average is around 9.6% across the country. Capital City just above that 7.5% number. So over the long term, this year for property is looking like it's being well above the national average of the long term. And that's really off the back of, like I said, we've got a shortage of supply and we've had interest rate cuts as well. That consumer sentiment is really starting to spill over. And I can see that number only getting stronger for here in this last quarter of the year and also heading into 2026. But if we jump into the rental side of the market, so we'll maybe go from the bottom up here. Capital City average at 5.9%, so that's still really strong. National average at 5.3%. Hobart is leading the pack here over the last 12 months at 11.5%. It did cool down last month a little bit, but we've talked about normally what we typically tend to see on markets that maybe in that earlier adoption phase is when that price growth isn't as aggressive as the rental side of the market. So the rental market in Hobart's been really, really strong. Darwin, a bit of a change there. So it actually dropped down last session. So I'd be curious to see the data capturing on Darwin, because it spiked 8% since the last session, but the 12-month change has been 5.9%. We can see if we go through the rest of all the other states across there or capital cities, they've all been around that kind of 4 to 5, 6% range. Everything's actually trended up other than Brisbane over the last since the last session. So rents pushing forward. I guess the key points I want to cover off there, though, Sydney, after months of creeping up, maybe just ease a little bit. I think that might just be an anomaly. Perth, Brisbane, and Adelaide, after months of easing, just flexing maybe a little bit, maybe not so much Adelaide. Darwin continues to cool, and big rental growth in that Hobart market, despite some easing just for the month just gone as well. But when we touch on the state-by-state breakdown, because we often get asked in terms of where we're purchasing at the minute, and again, I always like to reiterate when we go through these videos, there's a couple of components to this. So firstly, there's interest in terms of from the data side of things, in terms of what we're really seeing, but also to sometimes those purchases can be led by client preferences. They might already have a certain amount of properties in a certain state, so they want to diversify into another state. But if we take a look here, the lion's share of our purchasing is still happening in that Victorian market. We've been consistently between that 70 to 80% range in Victoria now for at least the last probably 6 to 9 months. We can see WA, there were no transactions in WA last month. Again, like I said, it's not necessarily a market that we would say we wouldn't be buying. It's just whether the deal stacks up for us at the time. And also too, a lot of clients are not particularly interested in buying in WA now. They want to be getting into the new emerging markets, which is that Victorian market. Tassie at that 3.4%, I can see that creeping up considerably for us from here. It's never going to be a market which is going to have a lion's share of our purchases just purely based off, it's just not a hugely populous area. There's not a lot of properties to purchase in itself, but I can see that creeping up because we do have some more approved locations coming through there. And Queensland, it's still, if everybody's still wanting to buy in Queensland to a certain extent as well. So we're at 17.2% for that Queensland market as well. But if we have a bit of a purchase summary in terms of, we'd like to get asked in terms of what the price point we're buying at. So the median price point for the last update has been around that $620,000 mark. So that's creeping up further and further. We get the odd month where it drops down, but the running price for the year is definitely up significantly from last year. We went back just a few years back. I'd say that number was in maybe the mid to high fours. So that median price point, that affordability price point, which I've touched in other videos, we maybe will put a link in the corner up here. The death of the $500,000 property is not too far away, particularly with a first home buyer scheme. Median yield at 4.8%, that is definitely compressing at the moment. What we're seeing is rents are not keeping up with the same pace as house price movement across the country. So went before, it was around about that 5.5% mark. The national average is around about that kind of mid nines. So capital growth is going at a much higher clip than the rents are going. So yeah, that's where you're probably going to continue to see that rental compression happen. And I would expect that to happen a little bit further from here as well, because we're likely to see a rate cut in November. It'd be great if they did in terms of in February, but I have a feeling if we get one in November, they're probably likely to pump the brakes a little bit. It might be like a May that we get the one after that, but we're probably due to get at least 2 more rate cuts over the next 6 to 8 months. That will also slow that rental yield down a little bit because landlords chasing that cost base won't be as strong there. Median build date around that 1985 mark. That's actually up a little bit. I think last year's average was 1978, so that's creeped up a little bit. Land size, always high land to asset value ratio there, around that 669 square meter purchase. But if we take a look at some previous purchases as well, I know people following along love to get a little bit of an overview of some previous purchases that we've done recently. So we've got this one here in regional Victoria. We secured it for $440,000, 3-1. I never like to touch on the car spaces because that's purely what the agent lists down. Sometimes there's an actual car spot, sometimes just the driveway. The rent we achieved there was around that 5.1% rental yield. We move on to a purchase here in regional Queensland. So a 4-2, 600 square meter block. We can see the advertised price. That is just purely a marketing tactic here. Advertised for $580, was secured for $620. Multiple offer scenario on that one. Rental yield at 5%, so renting at $600 a week. Really nice, neat and tidy, even though it's an older property, clearly been renovated and up to a good standard. And then we move into somewhere like Metropolitan Melbourne, and we're looking there, $820 purchase. This would be, when I say Metro Melbourne, this is probably somewhere on the fringes of Metro Melbourne as well. 4-2, 650 square meter block. Purchase at $820, rent of $640, rental yield of 4.1%. Fairly neat and tidy property there as well. So it gives those following along a bit of an insight in terms of where we're purchasing as well. But if you haven't already, I'd like to thank everybody for watching today's video. If you haven't already, make sure you smash that like button and we will catch you on the next one. Bye for now.